What's up, traders? It's your girl Kaya Trades, and I'd like to give you a warm welcome to the Next Level Collective trading community, but more specifically, your trading journey. I've put together some videos for beginners to get you from paper trading to profitable setups. In this trading course, you're going to learn what MNQ futures is, how to read the charts, how to set up your paper trading account, and then place your very first trade. So welcome to MNQ Futures Mastery by NLC. So first things first, what is MNQ? MNQ is Micro E-mini NASDAQ 100 Index. It is the smaller size futures contracts tied to the NASDAQ 100 Index. It is a multiplier of $2 per index and is about a tenth of the actual NASDAQ. This makes it super popular for beginners to start their trading journey with smaller accounts. Next up, we have the tick value. Each tick value is about 1/4 of the index point. Each tick point is worth 50 cents. So if I have 4 ticks in 1 point, that will give me $2 per point each time the index would move. For example, if price is at the level 100 and it goes down 1 tick, we have minus 50 cents. If it goes down a full point, remember there are 4 ticks in each point. If it goes down a full point, we are down $2 on that trade. Inversely, if we are up 1 tick, once we've placed our trade, we are up 50 cents. And if we are up the entire point, which is 4 ticks, then we'd be up $2. So take a little bit of time to get a piece of notebook paper, write down, let's say from 100 to maybe 25, do that math and kind of play around with the numbers to see if you can calculate that math on the spot. If you can't, it's okay. I've prepared a risk calculator that'll be quick, simple, and easy for you to pull up during your trading. Go ahead and download that. Now that you've taken some time to practice that tick value, or you've utilized the PDF printed for you and created for you to help you make it a little bit easier, we're going to move on to your margin. When it comes to trading, margin is borrowing money to buy more investments that are more expensive than what you would have initially had to start off with. This is done within your broker. You would have to check with your broker to see what their daily margin or overnight margin is. An example I have for you is, let's say you have $20, but you're wanting to buy a bicycle that's $100. You would borrow $80 in order to be able to purchase that $100 bike. Now let's say the price on the bike goes up. So now the price is $120. If you sell the bike now and you pay back the $80 that you initially borrowed, you would have $20 more than your initial investment of $20. So now you have $40, meaning you would have gained 100% of the money you put into the trade. However, if the price of the bike goes down to $80 and then you have to sell it, you only had $80 that you borrowed, so you give that money back and you have no money left over. So now you have to figure out a way to pay that loan of the extra $20 because you only had $60 to return back to whoever you borrowed from. This is really important to understand because although it can make your profits bigger, it can also make your losses bigger. Now that we kind of have an idea of tick value and margin, what are even the trading hours of MNQ? The market opens at 5 p.m. on Sunday and closes at 4 p.m. on Friday. However, there are 1-hour daily breaks around 4 o'clock to 5 p.m. Central. This market is nearly 24 hours a day, 5 times a week. Being able to use MNQ, the micro version of NQ NASDAQ, is super important for you as a trader because it can help give you a foundation of how to use certain platforms, how to calculate your risk as well as your profit sizing, and build up some proper skills for you to start the next level of your trading. Continue to the next video so you can learn how to set up your paper trading account next.